Well, we are still here. We're not hitting the road because we are about to follow the money on Classic FM 97.3 in conjunction with the Nairametrics crew. We have Ugodre in the studio with us and Ugodre. So where is the money heading this morning?
Good morning, Lagos. Good morning, Bukola. The money is heading towards you.
Amen.
Accept that. All right. Good morning, Lagos. Good morning, everybody. Wherever you're listening from, whether you're streaming live on YouTube or you are just listening on Spotify or anywhere you play podcasts or anywhere you listen to your podcast shows. This is Follow the Money, brought to you by Nairametrics. My name is Ugodre Obichuku. We do this every Monday, 8 to 8:30, where we try to break down key topical issues in the economy in the past week. Of course, it was a very busy week last week. And so today I'm not alone. Today I have a guest today on the show, and we're going to be looking at some of these numbers together. My guest, of course, is my very good friend and partner, Wade Ahime. Wade, how are you?
Good morning, Lagos. Good morning, Ugo. It's been long since we sat like this.
Yeah, it's been a while, though. Even though we do it in other places, but you know.
Yeah, let's see what Nigeria has to offer today.
Nigeria did have something to offer during the week. We saw GDP numbers pop up. MBS, according to MBS, Nigeria's economy grew by 2.54% in the third quarter of 2023. This was much better than 2.51% in the previous quarter, that's Q2, and of course 2.31% in Q1. Then if you do year on year as well, this time last year when they also published GDP numbers, our GDP growth, real GDP growth rate was 2.25%, but 2.54%. What's your take?
Step in the right direction. 2023, we've seen the GDP, just marginally grow. I think we're somewhere on Saturday where, it's obvious that if we really need to move the economy out of where it is, we should be doing GDPs in the range of 6%, 7%, 8%. How do we get there? Government is looking at 2024 budget spending. Mm-hmm. But they have the money. If you're going to borrow to spend, what are you spending on? The lack of infrastructure for me is a critical point for you to really focus on, and how do we ensure that we get that money into the right infrastructure, without all the issues surrounding infrastructure development, which is mostly surrounded by corruption. I think the capital markets should start playing a huge role in that. So I think the federal government should start working with SEC, the NGX, towards ensuring that more and more of these private companies, go onto the markets, build proper governance systems, and then start to see, aside from government spending, when you want to start doing PPP, what you'll find is you can attract, more funding, because people can read the numbers, the average Nigerians can see what you're doing, and so on. So for me, step in the right direction, but we should be moving in the direction of at least 3.5 to 4% from next year. If we're not doing that and growing, and we're still in the 2 and 2 point something,
we're not going anywhere.
I ain't going nowhere.
By the way, the government wants us to hit 1 trillion. I think at some point they said it was within the next 4 years, and then I think I heard another government official say 8 years. So they want Nigeria's GDP to grow to about $1 trillion. Currently, it's around 220 or so million dollars. If you convert, $250 million or so. If you convert to $250 billion, sorry, if you convert it into dollars from the current 220 or thereabout that it is at the moment. But then you did make a valid point. We should. I actually thought this year we would have been at about 3% or above, but it appears all through the 3 quarters of this year we've grown below 3%, which suggests that we might not meet the GDP numbers that we achieved last year. Last year we did grow at just slightly over 3%, 3.1% in 2022, but it looks like 2023 we would record slightly GDP growth. Of course, we all know why. There are a lot of headwinds this year, starting with that, brutal cash naira cash swap that affected nearly everything that we did this year. So we started the year pretty bad with that naira cash swap. Of course, the elections as well was a bit of a dampener to the economy and the fallouts of the election as well. And then let's also not forget that immediately the new government came in, they also took away fuel subsidy. That of course triggered inflation and slowed down a lot of businesses. As much as it was a good decision, it did have its own negative effect on the economy. And then of course the big one, the unification of the naira, that also had its own effect. As much as a lot of people thought that that would bring short-term succor to the market, it did not. Rather, we are seeing the exchange rate of the power of the market at above 1,000 naira to the dollar. So when you look at all these things, it did, in a way, contribute to slow GDP growth. That's not also taking out some of the issues that we've had globally. The global economy is also slowing with Russia-Ukraine crisis, now Israel-Hamas war. China also slowing down. Emerging markets not really getting the kind of funds or the kind of investments that they're akin to getting in the past year. So these are all some of the headwinds that we have been facing as a country. Nevertheless, there have been some sectors that have recorded remarkable growth. We've seen financial institutions have had very good growth this year, 29.66%. But it looks like this exchange rate or unification of naira really did favor a lot of banks.
Well, it should favor them, because when you look at them, they're the ones who give out the loans, so their asset sides are quite healthy.
As someone also said, they also had very good, dollar reserves, and so when they revalued
and then subsequently, over the last few weeks, we've seen the federal government trying to, pay off the backlogs. So that also is going to cushion the effects of their business. But in the long run, when you look at the economy as a whole, suffering really hard is manufacturing. And if we're not doing, if we're not producing, then there is going to be that challenge. Why? Because for me, and then agriculture has taken a huge slowdown. It's always in upper sides of the 20s, every year. But in the last two quarters is, I think this last quarter it was 23. Before then it dropped from about 27 to 25. So it's just
talking
dropping.
about contribution to GDP.
Contribution to GDP.
Okay. It's currently 20. It did go up to 29%.
This month?
Yeah,
this last quarter. So that means it's going back to where it's supposed to be.
But to your point, one of the sectors that have actually been dragging has been the industries.
Yeah.
So for our listeners, the MBS actually puts the sectors into three main buckets. So there is agriculture, there is industry, and then there is services. And so Nigeria essentially has been a service-based economy. With over 50% of our GDP in services, isn't it?
After Saturday, I was having a discussion with my brother, and one of the things that the basic principles of economics, it says goods and services, and we tend to forget that without a good, there can be a service. So when you focus so much on service, the question for me always has been, and I think we've had this discussion a few times, what products are you using to service, to sell this service? The industries are not working. So how do you ensure that the products from the industries are actually providing service for, whether it's a consumer or the whole, or the suppliers, so that economic value chain is not working as it should be? And a good example is agriculture. When we're continually talking about farming, rather than think about farm to market. Logistics, we know, is a huge issue. Insecurity. So these are the things I think government should sit down, work with the private sector, work with stakeholders to ensure that at the end of the day, there's a proper plan.
Yeah.
It's not just about farming. When you farm and the goods can't get to the market, and we've seen that in the inflation figures.
Correct. Good point, Wadi. And by the way, industrial sector contributed just 18% to GDP.
Wow, it's dropped to 18%.
Yeah, compared to 52.7% for services. and 29% for agriculture. It seems agriculture did make a leap in the third quarter.
Indeed.
And of course, GDP growth rate, it's not been that good for the non-oil sector. 3.9%. 3.9%, for services growth compared to 4.42% last quarter. And of course, industrial 0.46% just basically came out of a negative growth rate that we had last quarter. So the numbers are, here and there could be better, but if the government really wants to hit that $1 trillion GDP that they are targeting, Nigeria needs to do a lot more. We need to grow a lot faster. There might be a way out of it. Maybe we can do a rebasing. We did a rebasing the last time that sort of just made us all of a sudden, the largest economy in Africa. So maybe if we do a rebasing again, that could happen. But if it's not a rebasing, then we'll have to be growing at about, I actually don't think it's 6%. We have to grow at double digits if we want to hit that $1 trillion GDP size. And of course, that is hoping that you don't have exchange rate depreciations.
Yeah,
because the exchange rate depreciations does have an effect as well. We heard
the CBN governor say that banks need to capitalize.
That is a perfect segue into the next thing I want us to talk about. By the way, we have a special guest who will be on in a bit, and we'll be talking about a little bit about private sectors that you mentioned. Talking about banks, there was this news last week that the central bank is looking at recapitalizing banks. It's made the news, and people are wondering, when they say recapitalization, what do they mean? It used to be 25 billion. Back then when Soludo did that very first recapitalization. That was like, back then, oh my God, we were going from like 2 billion to 25 billion back then, and that triggered a lot of consolidations. And I think back then his point was that you had to have those sort of size banks with that size if you wanted a large economy, or economy that is driven by the private sector. So it kind of made sense at that time, and so you had a lot of consultation. But things have changed quite a bit from then. I did put up a tweet yesterday where I tried to explain it. A lot of banks actually have capitalization they actually have shareholder funds or net assets that are larger than 25 billion. Let me just give you a little bit of rundown. Do you want to hear some?
Yeah, go on.
Yeah, so let's start with the Fugas. FBNH, that's FBN Holding. Net asset currently 1.3 trillion. So no way, way above 25 billion. UBA 1.7 trillion. GTCO 1.2 trillion. That's GT Holdings. Access Holdings 1.6 trillion, and the largest currently Zenith Bank 1.9 trillion. And of course, if you now go down to tier 2 banks, Stanbic 471 billion, Fidelity 410 billion, FCMB 344 billion, Sterling 165 billion. So the question is that if we are going to recapitalize banks, where do you want to take it to? 2.5 trillion? 3 trillion?
Okay, so let me. I don't want to be the wheel in this panel, but let me trade from this side. Exchange rate today is how much? Your 1.7 trillion is how much in dollars? So when you're looking at,
that's 1.3 billion dollars, by the way. 1 trillion is $1 billion. So you have a lot of banks. You have like your entire Fugas bank all have $1 billion. Yeah.
So, but we're looking at 1 trillion.
1 trillion in
GDP.
It's not the banks that will drive GDP.
You need that base. Are you with me? You need that funding that will drive not just the organized private sector, like you and I have continually said. What we call the informal markets, the MSMEs, are areas where you need to find the way to structure the way you put monies into them, into funding. We've seen capital drying up, and so on. So at the end of the day, I think maybe that's an area that the banks would, new capital towards focusing on that, and that's capital.
I have my own strong views, though. I mean, banks only contribute just 4% to GDP. Financial institutions, by the way, not just banks. So the entire financial institutions just contribute 4% to GDP. So thinking that financial institutions are going to drive us to that 1 trillion GDP, I really don't. I don't know how that works, but I do understand why it's important to recapitalize bank. Not because you have to recapitalize them like Soludo did in 2004 or 5. And you have to do it now because of what you call CR, capital adequacy ratios of banks have dipped. And
I have a question.
Yes. Go ahead.
So which will drive it more, the fiscal policies or the monetary policy?
Monetary policy, actually. And to a large extent, fiscal policy too. Fiscal policy because you also want to align with the government's plan for the country. And this current government is expansionary in their view. And so monetary policy also has to sort of tag along with that. But banks' recapitalization effort is not necessarily because of fiscal policy. I think it's monetary policy. And that's why I said the capital adequacy ratios, which is a measure of banks' shareholder funds to their larger risk assets. That's the loans they have. So there's a way they calculate that number. When they think it's below a certain threshold, banks have to recapitalize. And so it's not like telling them, oh, you have to be at 2.5 trillion, you have to be at 3 trillion. You just have to be at a ratio. So banks that are below that ratio will raise capital. Banks that are above that ratio don't need to raise capital. And let's also understand that raising capital isn't just a game. When you raise capital, you have to provide returns on that capital. So that piles pressure, isn't it? So when you raise capital from Nigerians, you have to deliver. Exactly. So you got to be able to sweat that money. So it's not just easy raising capital for raising capital's sake.
And I think that's why I said the sectors you need to look at. When you build the retail sector and make it more structured, then you would see that those returns coming. Because on the average, the retail sector, the informal market, the kind of returns that you can see if you properly organize them. And then government also in terms of, from the fiscal side, in terms of organized structure of taxes and all, these are things that, both sides can play with and work together towards achieving the goal.
All right, very interesting week we had last week. But we're going to take a break, Bukola.
Yes,
and we'll have our guest on.
Okay, stay with us here. It's still Follow the Money on Classic FM 97.3, brought to you by Nairametrics.
Classic FM 97.3.
Classic 97.3. I'm representing for the gangsters all across the world. Still informer.
The streets of Lagos has its own unique sound.
Classic FM. Never imitate, always be creative. While others monitor, we definitely pick up the ticket.
You can't choose your family, but you can choose your radio.
The greatest hits for Lagos.
It is not just radio. Classic FM.
Follow the Money here on Classic FM 97.3 with Ugodre in conjunction with Nairametrics. And we have guests with us in the studio. Ugo, you get to introduce them?
Yes. So on this show as well, like I mentioned the last time, we're going to be having, guests come occasionally to discuss different things. I mean, it's following the money and we'll follow the money across sectors, private or public sector. And we do have guests from Shekel Mobility. You guys want to do a quick intro?
Hi, Nigerian, Lagosians. My name is Somi Olukomi, co-founder of Shekel Mobility.
Yeah, my name is Benjamin Oladokun, co-founder of Shekel Mobility.
Man, you guys got radio voices, man.
I follow you.
This is not native nobody.
I studied for a minute, so I learn fast.
All right, that's good. Good to have you guys here, man.
Yeah,
so quickly, what's Shekel Mobility? I mean, for those who are just hearing it for the first time.
Okay, so Shekel Mobility is a B2B marketplace for auto dealers. We essentially help auto dealers find, finance, and sell used cars. We're targeting the $30 billion African car markets. We're looking to expand that market.
See, I like when I hear beyond dollar. That's the way it just hits me, man. Okay, so did you say finance used car market?
Absolutely.
Yes, absolutely.
And the market is sized at 30 billion?
Yeah, so it's for the entire African ecosystem. Again, before we came on scene, one of the challenges the auto dealership industry was having was the finance sector, especially the banks, didn't know how to deal with the dealers, especially because majority of them are not structured. So you have, the majority of Africans prefer to buy second-hand used cars, Tokumbo as is popularly called. For a bank, that's kind of very risky for valuation sake. They don't know when the value of this vehicle is at a particular threshold. So these are the things that we came in to kind of more like act as a intermediary,
like a
both
bridge.
parties say, hey, banks, we know how to value it. We'll guarantee you that the dealer is going to pay. Dealer, this is what a bank requires, and we try to make them conform to that.
So let me try and understand it now. So if I wanted, to buy a used car, I have this dream car I've been thinking of buying. I've been telling you about this since. It's just that. Because I could so as I want to buy a Lexus 5. This one that government officials are driving up and down. That Lexus. If I wanted to buy a Lexus and I wanted to approach a bank, why do I have to approach you first?
No, so we're focused on helping the dealers actually.
Again, dealers, that's the guys who, the auto guys. Okay,
so that's not an indivical thing.
Not at the moment. Again, so we find that we also help consumers that want to sell and also want to buy by connecting them to our dealers, because we're empowering the dealers for the most part. Banks typically will not. So what they do is they don't see the car as the assets they lend to. They actually lend to you based on your salary and all of that. The asset can just be a medium, a product, but it's not what they use as the assets.
Interesting. Interesting.
Yeah.
So more like a B2B to C kind of business.
Yeah. Absolutely.
Fantastic. How long have you guys been operating?
Okay, so Shekel itself started full operations last year, January. So since then we've raised for a sizable amount of money.
I'll say that we've been in space for over a decade actually. Yes, so we've been in auto space in different segments. We launched, so we had a business. This is not our first company together. Our last company actually, we exited the company to start this fully.
Oh, cool.
When we saw this opportunity. Yeah, but we launched this Shekel Mobility fully, even though we also had time to do a lot of pilots, but we launched it fully last year, January.
So how is it faring? Was it like
so it's faring well. Even though I would not like to mention some figures on air, but we've raised, like I mentioned, sizable finance, especially from United States of America. We are a product of Y Combinator, for example.
Fantastic.
By some investors in Nigeria, Ventures Platform being one of them. So of recent, we've been in the news. The recent round that we raised, which was closed about 2 weeks ago, raised $7 million. To do this across Africa. Yes.
Fantastic.
So with the increase in the exchange rate and all, how has that impacted? Talking about cross-border transactions.
Okay, so again, I think one of the good things that we have is, like, apart from the experience and also the experience of our founding team and also like investors that we bring, unit economics is very important for us. So the way we've designed our model is such that it's if you're doing naira stays naira, dollar stays dollar. So we've looked at that model in such a way it doesn't really impact us. So when the value of a car goes up, we see that our volume goes up. Like, maybe the car used to buy at 20 million naira, it's probably now like 25 million. But we stay. So if you want to, every transaction that we do in naira, it stays in naira. So we're not exposed to that risk.
So to drill down a little bit on this unit economics and the model itself for you, because I'm just imagining if I was in my car driving, I'm asking, so how do these guys make money? Like, what exactly is the model?
Okay, so we make money several ways. Being for the dealers, for example, we provide them access to the banks that give them loans, so if you want to buy more inventories, and we kind of do like arbitrage, you understand? So we probably have to now, if bank is charging them 3.5, 4%, we charge like 5
so you have a margin on what
so
you're charging them for the risk that you're taking, for the guarantees you're providing.
We're kind of guaranteeing them, the banks that this dealer is going to pay you back. Which I'm sure we are probably going to mention certain things about how we provide security for that particular system, which is why banks are more comfortable dealing with dealers through us. And also the fact that we, from source side, some of them want to buy the vehicles from United States of America or Canada, for example. We get all those sorted down to them receiving it right here in Nigeria, and also the financing side, we sort that all out. Okay, so I also like to mention the fact that before we came on scene, the dealerships are saying, they're not probably that sophisticated in terms of plugging their leakages. So you have a situation where we have to provide technology for them to be able to know, what inventory do we have per time? That reduces the kind of leakages that they have, in which it now becomes a more visible kind of thing to the banks, and they say, I like this. We know what inventory they have per time. We know how much they make last month, and the kind of margins they're expecting from those particular inventories.
Quick question before Bukola comes in, right?
Yeah.
So the way the model is structured, a consumer goes to the dealer and wants to buy a car. So can the dealer give the consumer credit?
Okay, so let me just take a step back. So basically, the way we work, like dealers themselves, right? They need. They've got a lot of problems. First of all, no one understands their business, so they're not able to access credit. So for the most part, the first product that we did was, offering credits to dealers. So I mean, as a dealer, be it all tiers of dealerships, like the local dealer, the guy that has a car lot, or the guy on the street that is an hustler, right? If you want to buy a car, so essentially we give you credits. So we give you a line, say 10 million, 20 million, depending on what you qualify for. And if you want to buy a new inventory, you just buy on our operating system. So it means we've seen dealers, because of this, like do 3 times more with their credit. So if you have 5 million, you can do 50 million naira transactions and all of that. So basically that's sort of like the subtle model. Again, coming to because the market is really huge. We've got tons of wait lists that we're trying to even provide to we've done about nearing $60 million transactions, but now we're really growing on we're like on a $100 million transaction run rate. So I think, and because of the integrations because post Y Combinator, there's been a lot of partnerships, so we're integrated to more banks now. So I mean, so
how do customers now benefit from this?
No, so when you say consumer, are you talking about the consumers like
consumers like me now?
So then
I'm looking out for myself.
Tend to benefit directly is because we are reducing the cost of operating a dealerships. So that kind of impacts the cost of those vehicles.
Of the vehicles themselves.
So it's a long-term play for the consumers. Right now we're focused because we need to solve the core problem first. Because the dealers themselves, they're not even properly structured. So but in the long run, it will impact the consumers. But right now, the way because we find a lot of people reach out, I want to buy a new car. So what we just do is we help them sell.
So you're basically solving a huge part of this value chain, which is the dealers and funding. And then once that is solved, it now makes it easy for people to buy cars like they do in the US and stuff.
Absolutely.
Brilliant.
So how do you know who's qualified when it comes to collateral?
It's our own.
So
I'll probably just. So usually what we do, the interest of our platform is because we understand the dealerships, and let's say for example a lot of dealers right now, if there's a car that a lot of them wants to buy, we need to be able to ensure that shekel dealers can buy in 5 minutes, right? So because of that, we need to pre-approve every dealer. So typically tops 48 hours, we do all these checks. Of course, the person has to sign up on shekelmobility.com. Once you do the sign up, you put in we've automated our system as much as possible, integrated to several, our platforms to verify identity, to sort of check your creditworthiness and different things like that. So when all that is done, then we then move to so there's 4 stages essentially, of your personal identification, your business, confirmations. Also, we don't get deep with your business because we're really trying to help these dealers at the core of it. So we really need what transaction, how often what do you sell, what's your capacity, what's your lot size. So we also get down into your lots. We go inspect the lots. So we do all this in 48 hours and do if I honestly tell you what we do.
I actually like your synergy. I'm going to come to both of you in a bit now because we're running out of time. But first of all, I'd like to ask this question. How confident are you about the Nigerian economy? Quickly, how confident are you? Super confident?
So we obviously the easiest way to answer,
because you guys are investing in here. It's good that you're investing. So, but how confident are you? Are you sure you're going to make your returns back?
You rightly mentioned it. The easiest way to prove our confidence in the economy is by investing in it. Now, again, all the investors that dropped money are waiting for returns. So you're not going to get $7 million to go and sit in your house. So you get it, you're expecting to bring it back as well. Plus, again, moving to upward mobility for majority of Nigerians, moving from a class to a higher class is something that is already happening and will continually happen. And once that happens, one of the first things people tend to get is their vehicle. So people, we've seen spike in sales, especially for fourth quarter, which is always the huge part of our industry. So you have a situation where even people are saying, there's no money out there, but people are buying cars. They will buy cars. Whatever it takes, they will buy cars. So the industry is one that is growing. So we expect it to see grow, and that's why we are comfortable with investing in this particular sector.
Fantastic. So 2 last questions. And we're going to take it quickly because we're running out of time. One is, how did you guys meet? And then secondly, shekel. Why that word, shekel?
Oh, okay.
you take the word. I would say how we met.
Okay.
So even though we attended the same university, Obafemi Awolowo University, but we never met.
Great Ife guys. Oh, you never met on campus?
We never met on campus. We met at 440. So it was an accelerator program by Google. Mr. Easy was a product of that as well.
All right.
We were all friends then. So that was how we met. I wanted to start a company at that time called Easy Papers. It's still existing right now and services a lot of huge companies, Coca-Cola being one of them. So that was how I met. I wanted a co-founder that understands the vision now, is able to assist me in getting it done. And it was there all through. And so since then we formed a synergy. In fact,
you guys sound like like one person is a rapper and the person is R&B. You're just fluent, you know.
One of the good things that we also discovered that whenever we didn't do any business together, it never succeed.
Wow. So when you guys succeed, fantastic. So Shekel, why that word quickly?
Oh, Shekel. First of all, like I think a lot of people will connect it with the Israeli currency, but I think going back, you know, Shekel actually means like the weight of money. Like it's like the original, you know, measurement for money. And I think even though it's funny, like it just popped up like it was a conversation with a dealer. So when we were doing because we did extensive research. And he was doing conversations that he was talking about like how he wants us to just power his business, you know, and I'm like, okay. And the thing was it was almost like, you know, and he just dropped like, oh, we'll check out your business, like that kind of stuff. So it's almost more like, you know, but again, the word is like we're powering the auto dealership business. Yeah.
Fantastic, guys. Thank you so much for being on the show. If you're just listening, you just missed out on Shekel Mobility. That is a company that is trying to solve a lot of the issues that you have in the car value chain, automobile value chain in Nigeria. And we have them as guests today on Follow the Money. As usual, we do this every Monday. Always a pleasure to be with you, Bukola.
Always, it's good to have you back.
Yes. And I love this. I love this.
I
love this. By the way, if you missed any part of this show, you can also go to Spotify or anywhere that you listen to podcasts. We're going to have this as well on Nairametrics so that you can stream and listen. Thank you guys so much. I really appreciate discussing with you.
The pleasure's ours. Thank you.
All right, the Classic Morning Show continues. Stay with us here.